It is a Thursday, January 28th. Silver is the story. And if you didn't buy silver already, I'm not saying it's the right time to get in silver. In fact, most people are talking about shorting silver. Of course, challenge here is, you know what? People who shorted silver are getting squeezed. So silver's the story. Tesla is the story. If you like Tesla, this could be an opportunity to take a look at it. It is down a little bit. It was thought that it might break out a couple months ago, a month ago. Since then, it slid a little bit. This is live. Your comments show up, and I see them and respond to them. We talk about them. Most of the comments the last couple of days have been about silver. So that's what I've been talking about. Gold is strong as well, getting up to $5,500. So here's the deal. Copper is strong. It did have a big move yesterday. People are looking for what the next metal is. That's not silver. That's not gold. That's reasonable, understandable. I do think you do want to keep a sort of peripheral vision on other sectors that could get some of that rotation. Because yes, those are safe haven assets, gold and silver, but when they go so parabolic, they start to look less safe. There is a chart floating around of sort of the silver move back in the 70s, where it actually went quite a bit higher in terms of relative percent, and sort of daily or weekly gain, concurrent to gold. This is too many academic words here. It goed up, okay, at the same time as gold, and it kept going up after people started shorting it. So yes, people could short back then as well. So here is the challenge. Bitcoin doesn't seem to be really absorbing much of the money flow that was supposed to come out of metals. Metals seems to still have the flow. So of course, all eyes are on where is it going to go next. Money has to go somewhere. Cash is also a place. The cash is a position. The US dollar is a position. Dollar is looking like it's not plunging or anything like that. There was talk, and it's visually apparent that it did break down from a bit of a sort of is called a base, but really sort of like a long channel wedge. You can use whatever geometric term you want, but there's definitely a breaking down of the dollar in the past week. It's very visible no matter how you look at it. And the reason we talk here in general terms is the charts are just a representation of what's happening actually, generally. And so this is how we communicate. Bitcoin, metals, which is people think of as gold. Bitcoin is digital gold. The market, so stocks. The bonds are not really doing anything right now. The rate cut was not adjusted. The market didn't seem to really hiccup either way on that. We still don't have a ton of strength. As I discussed, looking back to, post April 2025 tariff capitulation, when, everyone pressured the administration to stop using that word, and market started to go up again. It definitely had some hiccups on the way up, but yeah, so this is live. You can drop your comments, questions, tickers in the chat. But just to close this little rant out, so what we had were 3 periods, I would say, of upward momentum that were significant. So, we had, I guess in May would be the general way to characterize the first period of upward momentum. June cooled off. July was strong as well. August cooled off. September was very strong. And I think some folks who follow this channel, that's approximately when this channel really started going consistently, multiple videos a day, multiple stock ideas a day sort of time period. Really experienced some gains during that September into early October period. And so how that happens, if you haven't seen that before, is when the market is channeling up. In other words, I don't really like the word channel here, but it's going up day after day, right? That's obviously good for everyone, but it's also really good for smaller names that sort of have had a lot of price agreement for weeks to a month or more, that then find some momentum and break out. So that was the case in some names back there, including the uranium names, rare earth names. And of course, those names did get euphoric and then came back down. So, this is the kind of strategizing that's done here is you look for a move of maybe 10% or something close to that. Maybe if you can get really tight risk on a really liquid name, in other words, a lot of volume trades, so it's easy to position to buy and sell without moving the stock, or, it's easy for anyone to do that. So the stock is just less volatile. Then you can risk less and you can also look for a lesser gain than 10%. So you can look more at how much a stock moves on a day, what the range is, and then look for a risk reward relative to that normal movement. So Tesla, in other words, you could look for maybe to risk 0.25% on the stock and look for a move up of 4%. So that's pretty 1 to 16 risk reward versus on a USAR rare earth name that's more volatile. You might risk a full percent and then look for a move of 10% to start trimming your beginning of your position. So those are just general numbers to give examples. Everyone's risk tolerance and accounts position sizes, account sizes, how much that account size fits into your lifestyle is very unique, individualized. This is not a unique and individualized dissemination platform. That's called a financial advisor. This is not financial advisement. Sort of a distinction there, but a lot of people end up here doing it themselves. And when you do something yourself, you naturally end up looking for other people doing it as well. So it's more of a community sort of MO than a one-on-one sort of dynamic. So what can happen is if you're not exposed to markets at all, which I'd say almost everyone is not, right? Almost everyone, even regardless of upbringing, you might just think that, you have cash, so that's money, right? And anything you do outside of that is kind of a risk to put that money elsewhere, to put that cash elsewhere. And what is sort of a possible awakening for folks is that is a risk, just having cash. in the sense that you're rebuying. Every time you hold cash, you're rebuying the US dollar. You're saying, I think the US dollar is the best asset of any asset in the world. And although, that's a very, you might say, American platitude or whatever idea, you could think someone in Switzerland might only hold Swiss francs or, Swiss currency. And so to them, each of you are acting rationally, but you're actually betting on different forms of money. So that's a simple example, but you could imagine any asset is actually a form of money as long as it's transferable and trusted. And trust is pretty high in terms of getting your money in and out of certain assets in the modern age, especially most people watching this are in the US. So that opens up the floodgates into this whole market exploration that happens on a daily basis. So where are you going to put that cash? Well, then people say put it in the stock market, right? Generally goes up 5% to 15% a year, somewhere in that range on average. And you do that, and then you come across people who are doing a bit better than that. Some people they're not. Some people really are. And that's sort of the breaking point, if you will, once you experience some of the benefits of making your own decisions, really. So that's what brought you here, maybe something slightly different, maybe something very different, but that's what we're up to. And so with that in mind, it is earnings season. And earnings season is something you talk about when there's not a lot to talk about. But there is a lot to talk about. There's silver to talk about. There's gold to talk about. There's copper to talk about. But I don't think you can buy those right now. I don't think you can buy silver. I don't think you can buy gold, which is a little stronger even than silver. I don't think you can buy copper, which I don't know if it's going to have the same sort of euphoria that these other two have. Not that you need euphoria as a decision-making attribute factor, but sometimes the big winners can pay for a lot of losses, and we are in a period where you can take 8 losses in a row, and that's normal. So I'm not trying to be Debbie Downer, but the most important thing is going to be risk control, risk management. So we can do diligence on this channel. We can talk about research into specific stocks. We could talk deep into fundamentals, how much cash flows they're spitting off. But the balance is always, hey, I don't want to take any risk. And for that, I'd say, if you don't want to take any risk, put your money in bonds. That's what, people who are very in the more advanced, mature stages of their days here, that's what they're up to. But they're not getting gains on that. And if you needed the gains, that's when you do something a little riskier, which is putting it all in the market as a whole. But if you've been in any experiences like 2020, when the market dipped significantly, or 2008, then you start looking at individual stocks and metals, gold, etc. So that's my ramble for today. I'll see you tomorrow. Hopefully we'll have some more firm plays and some comments to respond to. good luck, be well, and I'll see you in the Discord in 10 with the best trade of the day. Yesterday's was good. And